Copper is no longer an industrial metal. It's becoming a strategic asset. This is Barron Street Research. We focus on macro, market positioning, and asymmetric opportunities. In this video, we're breaking down what we call the Copper Cold War, why power, AI, and geopolitics are quietly reshaping the copper market, and which equities have real leverage if this thesis plays out. What we're witnessing right now is not just a commodity cycle, it's a Cold War, not fought with weapons, but with power generation, artificial intelligence, electrification, and industrial capacity. At the center of it all is copper. The AI race is increasingly constrained by one thing: power. Compute scales digitally, power doesn't. Elon Musk said the next bottleneck for compute is not in the chips, it's electricity. In his words, what ultimately matters is wattage and tonnage. Every incremental watt of reliable electricity requires copper. Transformers, transmission lines, substations, grounding systems, backup generation. This is not abstract demand, it is physical. And physical systems run through copper. China has been explicit about this shift. In early 2026, Chinese industry groups advocated expanding copper stockpiles, not as a trade, as supply security. When the largest copper consumer in the world begins stockpiling, that changes global circulation. The United States is pursuing the same objective differently: grid reinforcement, AI data center build out, defense production, industrial reshoring. Different approaches, same endpoint. The Mag 7 hyperscaler race is often framed as GPUs versus models, but underneath it's a physical arms race. AI data centers are among the most copper-intensive infrastructure being built today. As power density increases, copper usage increases disproportionately. The infrastructure is being built regardless of short-term AI economics, and that matters. If you enjoy research like this and want deeper macro and capital cycle breakdowns, consider subscribing. This is exactly what we do here. Demand beyond AI. AI is only part of the story. Copper demand is stacking across multiple fronts. Electric vehicles use 4x more copper than internal combustion vehicles. Charging infrastructure adds another layer. Construction and electrical replacement cycles remain steady. Stationary battery storage systems are copper heavy. Robotics and automation require dense wiring and power systems. Defense spending is rising globally. Electronics, communications, precision systems. This is price insensitive demand. And the key insight is simple: demand layers are being added, old ones are not disappearing. Supply is the constraint. Copper supply does not respond quickly. A new large-scale copper mine can take 10 to 15 years from discovery to production. Ore grades are declining, capital intensity is rising. Even existing supply is fragile. A disruption at a tier 1 asset like Grosberg can move global balances. Industry forecasts already show deficits forming mid-decade. Yet many analyst models still assume smooth supply growth. What serious investors are saying: Stanley Druckenmiller, a legendary macro investor, said,
there are going to be some great commodities. Copper is in the tightest position, well, frankly, I've ever even studied.
That's a lot coming from him. Another industry vet, Jeff Curry, former head of commodities at research at Goldman Sachs, said copper is the new oil. Pierre Andorand of Andorand Capital said copper prices could surge to 40,000 per ton. Different perspectives, same conclusion. Demand is accelerating. Supply is constrained. Historically, that revolves through price. The BSR framework. We do not anchor to single-year price targets. We think in regimes. In a structurally tight market, copper in the range of 25,000 to 30,000 per metric ton is not extreme. That equates to roughly $11 to $13 per pound. On a relative basis, the copper to gold ratio remains depressed compared to past infrastructure cycles. If power build-out dominates the next decade, copper has room to catch up. Here are a few stocks in this sector that are kind of poised to benefit. This is a slide from Freeport McMoran, FCX, and this just kind of shows you what kind of operating leverage that the main players in the copper market have. As you can see over here, well, here's their EBITDA, and for 2026 estimated is 8 billion. But you can see as the copper price goes up, their EBITDA goes up a lot more. It says here that for every 10 cents per pound the copper price goes up or down, their EBITDA changes 415 million. So that's a lot of operating leverage. Um, the other thing that's going on with FCX is they are the owners of the Grosberg mine, which had a big landslide at the end of last year. And, just this one mine being taken out was, I think, about 2% of the supply. So you can see if this normalizes that they will benefit. The next company that we're going to highlight, and we're going to go, do some deeper dives into each one of these companies individually in a different video. But these are just kind of overviews of the main players. So this is Southern Copper, and this just shows you that they have the largest reserves of all the public companies. They're the number 5 largest producer, and they have a world-class pipeline of projects coming in the future. And they also have a lot of operating leverage. For every 10 cents that the copper price goes up, they add 125 million to earnings. So that's also, there's a low cost producer, and their sensitivity to the price moves is, big. The next company that's interesting is called Hudbay Minerals, ticker HBM. One of the reasons this one is interesting is because they have a big, one of their main catalysts is Copper Mountain, which is an Arizona property that should be coming online, I think, next year. And so, with the tariff situation in the US, like this one might be one to look for. Mitsubishi invested $600 million for 30% stake in this mine. And Mitsubishi has a very good track record of investing in this space. They own, I think, 5 or a piece of 5 of like the top 15 mines in the world. So it kind of de-risks the project and validates the asset. And this is more of a mid-tier copper play, so it kind of just is a validation of that company. And the last one here is Tech Resources, and this slide just kind of illustrates the M&A possibility in this space, like over the next few years. Right now, there's a proposal from Anglo American to merge the company, and it would create, a top 5 copper producer. So, it would kind of put both of these companies up in the top 5, and then obviously, there's the usual synergies and stuff with, these kind of mergers. So that's pretty much it for this video on these companies. But I'm going to hand it over to Trade Alts to go through the copper chart.
All right, so here's copper on a quarterly time frame, and every candle here, for those of you who might be new to technical analysis, every candle that you see here is 3 months of price action. So you can see that this dates all the way back to 2003, so roughly 20 plus years of copper that you're looking at. We're on an obvious uptrend. You have a nice low, high, higher low, higher high, higher low, and currently again we broke, once copper broke out, back here in 2021, it's currently still on its nice upwards trajectory. And, again, looks pretty bullish for the long term, which I think fits our overall thesis. And I'm going to really frame this analysis, talking about, I'd say for the next, 5 to 10 years, 3 to 10 years, something like that. And again, every candle is 3 months of price action. So this could take a while for things to play out. But, as far as immediate supports, which I think is an important thing to highlight, because, if you don't have any copper exposure, you're looking for somewhere where you might want to, start, potentially being a participant. A level of interest for me, really, it kind of like gets back around this R1, which, by the way, I do not use these pivots very often. These are decade long pivots. So this pivot started in 2021 and will run, until December 31st of 2030, basically. Like, these are very rare pivots that I use. But in macro analysis, when you're measuring things in terms of years and even decades, these pivots become very very useful. But as far as maybe a back test around 518, preferably though, you have this nice ascending trend line right here that's provided really good support since 2022. So for the last 3+ years, copper has been on a nice uptrend, and this trend line has held very nicely so far. And you even have these old quarterly levels. You have one here, which again, you had your quarterly level on the next quarter open, back tested as support, and then gave you a nice spring to the upside. And then you had the same thing here, actually. You had a nice quarterly level back in the beginning of last year, and then you had this open up, give you a complete back test back down to this quarterly level around just under $4, and then gave you your continuation to the upside. So far, last couple times that you've had this setup, you have had a chance to actually rebuy this quarterly level here. This one's at 481. So again, the first kind of like big on a quarterly time frame level of support, somewhere down here around this 518, 519 level. And then really, I think if over the next 6 to 9 months or something, we manage to have a bit of a pullback on copper, which I don't necessarily think is going to happen. The only reason that I would say that is just, you are kind of at this upward trend resistance here, which could be, a bit, it's usually a bit of an area of caution, I would say. But as far as like two support regions to look at for this year, I do think that these are really solid areas to keep an eye on. And, to the upside, kind of like, again, if copper continues to be on this upward trajectory, and we do actually break above this R2 here at 688. So if you get especially a quarterly close above this R2 would be very good sign of strength. That this kind of, that could give you a pretty good opportunity to actually accelerate to some of these higher prices, which I do think that over time we will see this. It's very likely. Kind of one that stands out to me quite a bit is this R4 here at 1134, 1135 region. And just kind of like a quick reference to why I think that if you actually switch over to the gold chart, and we'll go down on something like a little bit of a weekly time frame. So I'll show you why these pivots to me are very powerful and why I use them in my analysis. If you go down on a weekly time frame, you can actually see how well these pivots, how well they held as support and resistance when they were tested. So every single level here, had like, again, this one, you broke your R1, came back tested as support, and immediately went up to your R2, did the exact same thing, right? You broke up above, back tested it as support, held really nicely, went to your R3, did the exact same thing again, and look at that beautiful, perfect resistance there. Even got a pretty nice pullback off of that. 11% pullback is that's a lot in the gold market. And then did the same thing. You reclaimed it as support, and look what happened. Came up to your R4, massive. So far this is a very significant, possible like top as far as I would say this is like a pretty decent opportunity to be a very significant top for a while, is what I would say. But notice it's coming in at your R4 pivot, and very quickly silver, same thing. R4 pivot, $117. Look at that significant move. And silver had almost a 50% decline, so that was a very significant level. So gold, again, fast forward to copper. Copper hasn't quite made those those approaches that gold and silver have had, which they've been very hot, very much in the news lately. But for those specific pivots for copper, I would pay a lot of attention to this R4. But again, these R2, these R3, again, if copper continues to break up and out, especially out of this resistance here, I think these levels are going to be very significant in the future. And again, these levels are relevant until the end of this decade, right? So there's plenty of time to get there, but I would pay a lot of attention to that R4.
Thanks, man. So in conclusion, copper is becoming the physical bottleneck of the next industrial era. AI, power generation, electrification, geopolitics, they all converge on one constraint. Supply cannot respond quickly. Demand is increasingly strategic. This is not a trade, it's a regime. We'll continue tracking this thesis as it evolves. Subscribe if you want to stay ahead of this capital cycle.